Bitcoin's hash ribbons indicator just signaled a buy for the first time since the bottom of the market in 2019, at the very beginning of 2019. We're going to take a look at all the charts. We're going to take a look at all of the possible discriminating factors that might signal against this and maintain why the overall trend is to the downside. But we'll look at exactly what we want to see for trend reversal. That, and I want to talk about today the recent rash of YouTube censorship here on crypto content creation channels, and talk about what the follow through has been on that. There's been a lot of updates on that, and as well as give you guys the best TA that we possibly can in today's exciting episode of Breaking Bitcoin.
Hey, I'm Cap.
I'm Carlos.
And we're with Particle.io, and this is Breaking Bitcoin.
Hey guys, welcome back to another exciting episode of Breaking Bitcoin. I'm your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you guys are doing absolutely fantastic today on December 30th, 2019, just one day away from New Year's Eve and 2 days away from the new year. I hope you guys are doing fantastic, whether you're watching us on YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. Hope you guys had a fantastic weekend, are well rested. I hope you guys had a fantastic holiday season. Thank you guys so much. Sorry we couldn't bring you the show on Thursday and Friday. Myself and my daughter were feeling under the weather, and it was a good opportunity to just enjoy the extended weekend, enjoy the holidays with my family. You know, family was coming in, there were gifts everywhere. It's always kind of a crazy and chaotic time, but highly enjoyable if your sentiments are in the right place and you just focus on what's important in life, which is, in my opinion, when we get toward the end of the year, is reflecting on the actions that you've made, reflecting on the decisions that you've made in the preceding year, looking at how that has changed you as a human being, looking at kind of the fruits of your decisions, looking at the fruits of your labor, and developing your game plan for the next upcoming year. I'm one of those individuals who actually does symbolically take the transition from one year, or in this case, 1 decade, into the next quite seriously, because it is a fantastic opportunity, it's a fantastic ritual to just reflect on what you've done. And obviously, as we talk about all the time, that is so important being a trader in this environment, in this market, or in general, in any market or any environment that you want to be in, because as we've talked about time and time again, being a successful trader requires having a plan and sticking to it and reevaluating your plan on good data. You cannot build a system without good data. And unless you're keeping good notes, unless you're logging your trades, it becomes very difficult to build any sort of statistical database on which to evaluate your performance as a trader. Unfortunately, most novice traders just will not get this. This is what they struggle with the most. This is probably the biggest, this is probably the first, hey, you're in a serious trading environment that my students receive when they join the group, because we log all of our trades and we're very passionate about that. We push that very strongly, because that is where real trading begins. If you haven't been logging your trades, it doesn't really matter to me, in my opinion, whether you've been profitable or unprofitable, you're undisciplined. And there will come a moment in time when all of a sudden what you've been doing previously no longer works for you. And it is that moment, and most traders experience this, because most traders, what I've noticed is that most traders, when they initially enter into the market, they initially have a lucky streak. This isn't true for everybody, but I do find that on average, this is more common than uncommon. Most traders, when they first enter the market, have a winning streak, and they feel very elated by that. They feel like they're on top of the world. However, they're not logging their trades. They have very little trade strategy. They have very little discipline, and they have no risk management skills for the most part. There are some exceptions to this, but in general, it doesn't really matter the outcome of their trade, because eventually their luck streak ends and then the market turns against them. And then all they tend to have is strings of losers. And it is very hard for them to focus on that and comprehend that and push that back, be able to move forward from that, and develop a good strategy, because they don't have anything to turn to. They don't have a trade journal to turn to take notes. And one thing that I recommend, maybe I haven't said this before, but this is definitely a good aside. In addition to logging your trades, you should have a journal on your desk, right? This isn't my trading desk. This is just the production desk. My trading desk is over here, but I have a journal on my desk and I just write in it all the time. You guys can write notes as you trade. If you're taking a discretionary setup, taking notes is invaluable. And just state it. And that way you can go back to that and look at that all the time. You know, you should do this for any activity that you're in. And this doesn't matter whether you are inventing things or cooking or trading or it doesn't matter what you're doing. Note taking is what I've noticed in multiple industries, because I also have a hobby of leatherworking. I also have a couple other hobbies that involve creativity, and note taking is key to me. And for the most part, every successful individual that I've met in any sort of creative field, in any sort of field that requires a little bit of discretion, they take notes. They take notes and they learn. They build some form of database. So if you guys have taken nothing from this year of 2019 of watching the show, please take this forward with you into the year 2020. With your trading and with life in general, take notes so that you can learn from your mistakes. There's no such thing as a mistake that we can't learn from. But if you put yourself in an environment where you can't learn from that mistake because you didn't write the mistake down or your observations about the mistake, then it becomes very difficult to actually learn from the mistake. And you get caught in this wheel of not understanding why things are happening to you. And you become an inert piece of matter drifting wherever the universe tends to blow you. And you don't want to be that. You want to be a master of the universe, not an inert piece of matter being blown by the winds of time and destiny. So we've got a fantastic show for you guys today. We're going to be talking about the recent rash of censorship of YouTube, of content creators here on YouTube regarding cryptocurrency. When last we spoke last week, I said I wasn't really concerned about this, and we did get some updates on this over the weekend as YouTube came out, Google came out and said this was a mistake. They have, for the most part, from what I've seen, that has largely gone away. Or excuse me, I would say that the outcry on this has slightly died down, and I can only speculate as to whether it was the outcry from the community, which I would actually say was not that strong. This isn't really a situation where I can clearly point to the community, a community rallying together in a large stream of outcry, because I didn't really see that. I did see some. I'm not saying that there wasn't any outcry, but it didn't seem like any sort of overwhelming force. However, Google did admit that it was a mistake. I cannot attest to whether videos have been restored. As I said, our channel wasn't directly affected. Other channels that I communicate with weren't directly affected. I am aware of some channels that were affected. For example, I know that Chris Dunn was affected, Ivan on Tech, to name a few. And I don't really know the status of whether their videos have been restored or not, but I do know that Google has come out and admitted this was a mistake, that they didn't mean to do this. However, of course, we will be speculating, and much less than other individuals out there speculating right now on what are the long-term ramifications of this? What are the kind of the long-term meanings of this? Was this really a mistake? Was this an AI glitch? Is it really plausible that this was because of the scope of this? Was this really possible that this was a mistake of lower level employees kind of in charge of the moderation, taking liberties while upper management was off on Christmas vacation? I do find that a little implausible. So of course, and always having a backup plan. But we'll talk about that. We'll talk about we'll also be talking about MetaMask being banned in the Android store, the App Store, the Google Play Store. And, kind of that becomes a compounding factor. And also the realization that Google has stepped into banking recently. So we're going to talk about all that. But first, we're going to look at the charts. Before we begin, I do want to thank the sponsor of today's show, Coygo. Now, for most of us in the cryptocurrency game, we're going to be trading spot coins, whether that's Bitcoin or altcoins on Binance or Bittrex or Bitfinex or, God forbid, Bitfinex, but any exchange that you guys are going to be purchasing or trading your spot coins on. But generally, we're going to be managing multiple accounts, and that can quickly become a headache. So Coygo has developed a turnkey solution. I quite like it. I actually had an opportunity to play with the app more over the weekend. It's an ability and an option to manage all of your accounts from one seamless location. And my big concern with products that I've seen that have done this prior to what I've seen with Coygo is that it always requires you to trust some third-party service with your API keys if you're going to be plugging your API keys in. But not in Coygo's case. They're actually stored on your local machine, encrypted on your local machine. Your API keys do not touch Coygo server. The only thing that touches Coygo server is pull requests from the exchange APIs to pull price data and things like that. This is really popular with arbitrage traders because you can quickly move funds between exchanges and capitalize on arbitrage opportunities. So there's a lot of I wouldn't say that there's a lot of good seamless turnkey platforms out there for managing multiple accounts and exchanges, not on your local machine and not the way that Coygo does. So Recommend you guys to give it a try. There is a link down in the description, Coygo.cracking.cryptocurrency.com. Their app is in beta mode, so it's completely free to use. We don't make any money from you clicking that link. It's just to track the number of people who click it. So I recommend going and checking out while it's free. Giving them an opportunity to give them feedback and improve their app, make it better, because we do have to locate. Again, I've talked about this before. We've talked about self-regulation. If we want to self-regulate and have the government off of our backs in this industry, or at least have a favorable regulation pathway for cryptocurrency, then it's important on us to gauge and better our community, better our services. And the only way that we do that is by getting involved. So brief word for them and then end of the show, guys.
Do you trade cryptocurrencies on multiple exchanges? Coygo is here to help. View real-time insights, including trade analysis, order book superiority, arbitrage scanning, and more. No API keys required. Want to trade, transfer between wallets, or track your portfolio across exchanges? No problem. Just connect your API keys. They're only stored securely on your machine. Coygo servers never have access to your cryptocurrency accounts. Sign up now at coygo.app.
All right. I, of course, also want to thank today's Crypto Comment giveaway sponsor, Spectre Security Coin. Make sure to go check them out at spectresecurity.io. And as we do, we like to reward our loyal viewers and followers, members of our community. Of course, we also distribute lemons over on DLive, so make sure to stay tuned after the first break for that. And we're going to just select, we don't have anything special today. We'll have a question of the day later on the day. We're going to be talking about so much, but we're just going to select a random winner from the last video. This is going to be on December 24th. Will Bitcoin give us a Christmas miracle? Christmas Eve order book battle. Randomly picking a winner. So that seems to be me. Philip Lyle says, I just hope you won't get purged by YouTube, sir. Stay safe. We are safe all the time, my friend. So thank you so much, Philip. Get a hold of me in the Discord, JustinWise5696. There's a hashtag in there somewhere, I'm sure, and I will gladly tip you some crypto, my friend. Or you can message our concierge bot, who has recently been trained to take care of such things. All right, into the show. All right. Hopefully you guys are doing fantastic today. We're going to have a good session. There's so much that I want to talk about in the realm of Bitcoin. So much has really happened since last we spoke. So we're going to go over to the Coinbase chart on the daily, as we are wont to do. Let's go down to the LTFs. So let's pull up my notes, because there's just a lot to talk. Before we begin, quick shout out: David Rice, Common Man Crypto, Ron Legato died over there on DLive Crypto. Jack, good to see you, my man. Mbait22, he says, new stream name, cracking clickbait. Fortunately, there is actual substance to the content, unlike other crypto channels. Thank you so much, my friend. Dark Rico, Forza World, Steve, Farbod, Caprica. He's named himself the S Coin King. Thank you so much, Eli, back for the $10 donation. He says, hey, Justin, I've still been riding this wave for 2 weeks, catching a ton of 10 to 15% swings. Looks ready for another leg up. Please check. And as always, hit that like button, everybody. I assume you're talking about waves, so we'll definitely check that out. Hopefully the mods have grabbed that and put that down in the request section so I can get to it. Put this here for Mr. Eli. I'm assuming you're talking about waves. I know that a couple of our analysts have been following waves. All right. Frank, YOLO. Nice hash, Logan. Clickbait, or are we on a moon mission? We are on a macro moon mission, sir. Don't never forget that. We are on the macro moon mission. B-Flow. GBU Wally, my friend, my man. All right. If I missed it, Mr. Ether, good to see you, my friend. Let's see here. Mr. Ether, good to see you, my friend. We got Furry Boffin and Blockchain in the house. Let's get this. Tom, Crypto Newbie, good to see you too. All right, so let's get this. Okay, so full disclosure before we begin, and that'll kind of frame everything. So I am in a long position right now on Bitcoin. I did buy the dip. I know, not always what I do. I don't always buy the dip, but when I do, the dip tends to not stop dipping. Anyways, so we're gonna go look at the factors. And obviously look at our invalidation points, and also look at our backup plan, because we do. Now, keep in mind, I am still hedged short, right? I am still hedged short from around 7.55, 7.6 on average, right? So that allows me to not have a lot of concern and anxiety, whereas most individuals, when they are thinking about, oh, should I go long? Should I buy the dip, et cetera, they're not using they're not using very nuanced, or actually hedging is quite simple. I've gone over it before. I have multiple videos here on my YouTube channel, as well as additional information in the group, in our educational section, in our academy. But, hedging is one of the best ways to protect yourself when you're not in a clear bullish trend. And it does not, even subjective analysis can tell you what the direction of the trend is. Are we making lower lows and lower highs, or are we making higher lows and higher highs? That's going to be the candlestick analysis way. Is the moving average pointed up or pointed down? Let's look at something like the RSI. Is it above 50 or is it below 50? All of these things can easily tell you what the dominant trend is. And of course, we used a little bit more nuanced fashions in our PTP structure or in our trading system and our trading strategy. But all of those things can help you determine overall trend. And Bitcoin is either clearly bullish or it's not. And if it's not clearly bullish, there's not a great reason for you to be spot long without protection, especially now, again, that is questionable there. That's going to come down to your discretion if you prefer to be cash-based or neutral. But when we're in a clear downtrend, you absolutely want to be hedged. Although I do not like selling my spot Bitcoin. I do not like selling my long-term holdings. And that's why I love hedging, because it allows me to profit on the way down without having to do anything except open and close positions. I can keep my funds, keep my Bitcoin in cold storage where they're safe. I never have to move them. I never have to put at risk my UTXO split or reveal that. One of the main concerns I talked about with the free claim on the Hex coin giveaway, with the Hex airdrop. But anyways, I am spot long on Bitcoin right now. So let's, I've always spot long. I have a risk on trade on a leveraged exchange on Bybit, of course. So let's get back to that. The first thing that I want to talk about is obviously the headline. So let me get to my Bitcoin notes here. The first thing we're going to be talking about is the hash ribbons buy signal. So let me pull open, that's the logarithmic power corridor. That's time transformation. Here we go. All right. So here we are on the daily time frame of Bitcoin. Crypto caveman, my friend. Pounds table. Soviet Russia. The dip buys you. So we did receive the buy signal from the hash ribbons indicator. Now, this is something that we've been tracking quite closely. And if you guys are new to the channel, or if you've never heard about the hash ribbons indicator before, brief TLDR on this indicator is that it tracks a Bitcoin fundamental that most technical indicators will not show you. Remember, the Bitcoin is unlike any other asset that we can trade, except for other cryptocurrencies, but it is unlike stocks, of course. It is unlike traditional equities. It is unlike commodities, even though the association there is a little clearer from equity, because with traditional equities, with traditional stocks, you are buying into the faith of the company. So you have a lot of finance reports that you can analyze with fundamental analysis or statistical analysis. You have very clear, TA works very well in the stock market. Very classical TA works well in the stock market. Things like the MACD, RSI, support and resistance, supply and demand. All of these things are critical and important in traditional stocks. That's why a good disciplined approach to trading stocks can help. And swing trading stocks, I think, is definitely the way to go. Day trading stocks, not so much. I think the failure rate for there is high. Although I did personally what I used to do was trade the CME E-mini futures. But I'm kind of glad to be out of that hectic, constant daily life strain and struggle. Similarly over on the Forex timeframes. But I did always prefer swing trading on Forex, and that's what I ended up navigating to. And now I trade crypto. I also do still trade Forex, but we'll get to that later. So hash ribbons buy signal is monitoring the difficulty level and the hash rate. And when the hash rate falls below the difficulty level, it means that miners on average, less efficient miners are unprofitable, meaning that, keep in mind, we are going to assume that Bitcoin miners are accumulating excess Bitcoin and they are not selling all of their Bitcoin. This is typically not how operations run. Operations, to my knowledge, do not sell all of their Bitcoin unless that is required for cost. They're going to be selling a pre-portioned amount plus profit. And then they have learned that obviously holding Bitcoin is a good opportunity for them to accumulate an appreciable asset. And then obviously if they're going to sell, they're going to do so at higher prices, because when you have a flow of Bitcoin in, a consistent flow of Bitcoin in, gives you a lot more patience. So you only have to sell at cost to keep your operation running. Now, not all mining operations run this way. Some are purely for profit, and it just kind of depends. But overall, we do have to assume that Bitcoin miners are, to a degree, accumulating Bitcoin and that they do have excess Bitcoin on hand. However, once the hash rate falls below difficulty level, it means that they are no longer as profitable, meaning they have to begin selling their excess supply. So the hash ribbons indicator is designed to let us know when market capitulation is likely, because this has only signaled, this is the 10th such signal from the hash ribbons indicator. And since the inception of Bitcoin, it's only given one bad capitulation and or buy signal. Typically, the market has always capitulated at least 30% following a hash ribbons capitulation signal. And again, we can track this back. End of November, we did receive that capitulation signal on the 19th of November, and that did lead us into our current, slightly double bottom, current consolidation period, where the entire market is, we're going to break out, or we're going to break down, we're going to break out, no, we're going to break down. No, we're ranging, right? So you wait for the breakout or breakdown. You guys are ridiculous right now. But anyways, I digress. But then following that, we do wait for the 10 and 20 period simple moving average technical indicators on the chart to cross over to the upside. So for the 10 simple period moving average to cross the 20 period simple moving average. And then that is the buy signal, right? So that is waiting for price momentum or price trend, price action, in other words, to turn bullish before actually initiating the buy, and implementing that simple strategy on top of the hash ribbons indicator has removed almost all drawdown and typical upside. Again, I've seen ridiculous numbers. The highest number is 5,000, but again, upside is quite nice on the hash ribbons indicator. Keep in mind, you want to be a little wary of that 5,000, because going from comparing price rises from 2011, 2012, 2013, I think is less germane because of liquidity, because the market has become exponentially more liquid, and it is harder to make those same valuation movements in a more liquid market. The more liquidity in a market, the more willing buyers and sellers there are at every single price level, and large price swings become difficult. However, we still have an exciting, very volatile market in the form of Bitcoin. Great market to trade, even on the intraday time frame. All right, so this is signal to buy signal. Targets are going to typically be your own on this as objective targets. We've talked about the only levels of overhead supply that I'm looking at right now are the 8,000 level. We'll actually go, that'll be on the Coinbase chart when we do go look at levels of supply and demand. But this is interesting. This is only signaled, again, this is the 10th such signal in the hash ribbons, in hash ribbons history. And I think that obviously a lot of the market has responded to this. There is a lot of bullish excitement in the market right now. There is a lot of bullish excitement in the market right now about this particular indicator. And we always, again, now I don't want to come out and say that this indicator is garbaggio or anything like that, because this is an indicator that I've been following. And we talked about when we actually did recover, from minor capitulation, which occurred before we went on Christmas break. We talked about how we were removing that from the bearish argument, but we were putting it on the side. We were putting it on the standstill until we actually got the price action confirmation. Well, we did get the price action confirmation. We got the price action confirmation 2 days ago, 2 daily closes ago. And so we do have that buy signal now. Now, whether or not this plays out, keep in mind, very similar to what was the NVT ratio or signal that everybody was really hot to trot about there for a while. Remember that one? Yeah, that one didn't amount to much either, did it? So even great indicators like this, you want to be cautious about things that have worked historically. And then when you actually tend to go use them, especially if when you go to use them, they've become quite popular, they often offer up great opportunities for liquidity captures, i.e. you get a lot of retail to buy at a local top, and then savvier traders will actually use that liquidity as opportunities to fill short entries and then take the market to the downside, or reversely for short signals. Everybody will sell and they'll use that opportunity to grab liquidity and push price to the upside. So you always want to be aware of the social aspect of this. However, I know that a lot of people have kind of banked on this. I don't think that's a good idea. I think that there's nothing wrong with paying attention to the buy signal, and honoring it and looking at that as a potential setup. But again, as with PTP, as with all successful trading systems, you want to have a little bit more discretion. You want to make sure that you're protecting yourself. This is not something that you ever want to go. There is no such thing as a magical indicator that's right all the time. There's no such thing as a magical trading strategy that's right all the time. This could be good. This could be bad. I don't know. I've never used it before. I do know that it's interesting. And upon back testing, it has really good results. So for those of you who are kind of banking on the bullish trade for this, I don't think that you're silly. I am paying attention to this as well. It's why I'm kind of open to longs. Again, I am spot long on Bitcoin right now. However, I did just enter that long very recently this morning because of the order books. And we'll get into that here in just a little bit. But I did just want to cover this. This is, again, a historical signal. This has not signaled since, again, the bottom in December, January 2019. And let's just go take a look. Again, remember these things, this is a very long-term indicator, so it can take a while for these things to play out. Because we did get the capitulation over here and on the 30th of October 2018, the day before Halloween, and price, you can actually see the price moved up. We got the capitulation signal and price moved up. Price moved up for almost a week. And then we stalled out for a little bit, and what followed? Obviously, the dumpening of November 2018. It did lead to the market bottom, obviously, as we know now in hindsight. And we do get the signal here on the 11th of January, the buy signal, the confirmed buy signal. Now, following that, price actually kind of drifts lazily to the downside and actually moves. Let's look at the closing price on the day that signal was generated. Actually moves against us, turn magnet mode off, actually moves against us about almost 8%, 7.68% until the actual new lows of the market following that buy signal. So just keep in mind, and we can actually see that even the indicator, the 10 and 20 simple moving average, they cross back under. And it wasn't until the next 10 and 20 buy signal that actually kind of signified really the best time to buy in the market. So just be aware of that. Be aware of the downside. Be aware of the range that we're currently trading in. And don't expect price to just take off to the races just because the 10 and 20 simple moving average crossed over, or just because we got the hash ribbons buy signal. Even testing this historically, it can often take a week to a month for us to actually get positive bullish momentum and begin moving in the new dominant trend. And because it takes a while for the order book to flip, it takes a while for traders to get positioned on for enough volume delta to be accumulated, or for the volume delta to turn positive enough on a macro scale for us to actually move out of a consolidation range and get a breakout. So if you're trading this, be patient, position size responsibly, set a reasonable stop loss for your trade setup, understand your invalidation level. And again, as with all trades, know when you're going to take profit, because if this indicator is correct, then it means we're probably in for a hell of a face melting bull ride. Okay, which would be great. It'd be great. I got quite a lot of Bitcoin. But if it's wrong, be prepared for it to be wrong, because it has given, out of the previous 9 indications, it has given one bad signal, which led to drawdown of about, I believe, 32%. So just be aware of that. And again, that negative 32% would be corresponding to our lower downside target of 4.9 thousand, which is still on the table. Okay. The other thing that I want to reference while we're here looking at the daily, before we kind of get into the daily price action, is going to be the BitMEX funding indicator. I've become quite fond of this indicator, and I've noticed some patterns. Prefer to keep those. I'll tell you when they give a signal, but I prefer, I've done a lot of work. Me and my team of analysts have actually done quite a bit of work on this indicator, and looking for patterns and looking for specific setups that we want to take off of that. And I want to keep that close to the chest. No offense to any of you guys, but again, we worked kind of hard on that. So I'll tell you when we take a trade based off of it. But as with most things, there are certain things that I do like to keep trade secrets. 30-minute short signal on my intraday setup, which I'm not running right now at the moment. But anyways, so funding is positive. And again, we've talked about BitMEX funding as a counter as a social counter trading system. Often when BitMEX funding is positive, the market will not move down. However, what I will say is that BitMEX funding typically does have to reach some form of extreme before we can actually, before it actually is a good counter trading signal. Other than that, it's just kind of this raw speculation that, well, most of the market is longing, therefore I should be shorting. Well, that's not always the case, because if we go and look at when the market actually does take off, it does occur on negative funding, particular negative funding, but it also does, BitMEX funding can also be quite positive when the market is trending to the upside. All we have to go do is look back at any time. As we can see, the market's trending to the upside here. The market's trending to the upside here. BitMEX funding is quite positive. The market's trending to the upside here. BitMEX funding is positive. And we can go back and look at the majority of the 2017 rally. We can see the funding was largely positive. So just because funding is positive does not mean that price must move down and that counter trading is good. Again, I think the extremes are what's important, and the patterns are what's important here to look at for in BitMEX funding. But overall, I would not say that this is either bullish or bearish. This is largely neutral. I think that individuals would kind of be jumping at the counter trend trading signal right now at this point, especially because funding has largely been quite low. Funding's been pretty low because volume's been pretty low, right? Which is what happens. Volatility is contracting. Okay, so we covered that. Now, of course, what day would be complete without talking about the CME futures in the gap? And this is one reason that I definitely wanted to hold the short open last night. So, by the way, give you guys an update on that. So we did Honestly, the weekend, the Christmas season's been really good to me as a Bitcoin trader. I was mostly just active in Bitcoin. I would do some family activities. I'd come in the morning, analyze the charts, kind of set up my trades, let the members know. We made quite a bit of money off Bitcoin this weekend and over the holiday season. We caught our first short. We shorted from 73.43 to 71.65. We went long from 72.88 to 74.46. We then flipped. We shorted from 74.46 to a little bit below 7,300, which is where we took our profit today on the long. Now the gap has been filled. Excuse me. So referencing that back to what I'm talking about now, last night before I went to bed, I looked at the CME futures and saw that we gapped open. Well, we're going to fill that gap more than likely. I mean, traders go crazy for these gap fills. So anyways, held the short open, knew that we were in for about at least a 2% correction. Now we do tend to overshoot these gap fills by a margin of anywhere from 1 to 2.5%. So I'm kind of okay with the drawdown or with the pronounced continued movement to the downside. Again, kind of monitoring the trade today a little bit closely, making sure that we're not biting off more that we can chew. But again, I'm pretty proud of my analyst team because we do have the backup trade, and again, we're also cloaked with the hedge, so it's pretty low risk for us to be taking the speculative long. So the gap has been filled. Again, keep in mind that we do have a tendency to overshoot these by a little bit. But the next thing that I want to talk about, okay, we talked about BitMEX funding. Now let's go back and look at some more technical indications here. So let's go to the daily. Recently on the daily, this is my proprietary indicator. This is volatility expander that you see overlaid on the chart. And what we can see from volatility expander is just what we've seen here for a while. It's a great reversion to the mean style trade. And this is fairly what we took for a setup, although we were using order book data as well, kind of just following order flow to add a little bit of discretion and a little bit of care to our trades. So we basically longed the breakout we shorted the initial rejection. We longed the midpoint support. And then we reshorted the rejection again at around 74.46 is where we ended up getting into the short, which we took down to about 7,300. Price currently trading at about 72.29. So if we would have kind of held open, we could have gotten squeezed out an extra $100. And again, potentially we might have been missing out on more if we do end up continuing to break to the downside. But again, we'll be looking to enter one thing, public service announcement time. I talked about this morning. I've used these terms a few times because I use them. I added them to my lexicon because I noticed that a lot of other traders were utilizing the term. And the term is this: momentum long and momentum short. Okay. So let me, I started using those terms because I do try to communicate or use terminology that I hear other people utilizing so that we can better communicate. This is a fundamental concept of expanding your lexicon and communicating with other individuals. But upon further research, I've realized where I think these terms originate from because I've never heard those things, momentum long, momentum short. I didn't hear them in my experience as a trader prior to, I want to say around 2019-ish. So I started doing some digging and I realized that they were kind of becoming popular from a few other, I'm not going to mention any names, but I started doing some research and actually finding out where a lot of these terms kind of became popular, started being used. And when I started looking at setups that were recommended by these individuals, I started realizing that they'll say, all right, yeah, we're short, man. We're taking a short trade. We're going short. We're going down. We're breaking down. Wait. No, sorry. Big green candle. We're going to go momentum long. Okay. So you're flip-flopping. Okay. Without much of a plan, it seems. Okay. Whatever. Fine. Seems fine. So I didn't realize that. And I just started using momentum long, momentum short to mean breakout, right? Breakout long, breakout short, because that's what they mean to me. Or again, sometimes potentially we can see order flow shift dynamically and there's good risk to reward in following order flow. But upon further review, I've realized or come to the realization that when most people or when these individuals that have made this term kind of popular and in the modern lexicon, momentum long, momentum short, what they really mean is like FOMO, okay? Where they have a long trade and it's moving against them and then they see a big red candle and they're like, oh, momentum short. You mean selling the bottom, or momentum long, you mean buying the top. So FOMO short. So keep me on check with this, guys, because I'm going to actively try to remove those words from my lexicon as I've come to realize that they mostly mean nonsense and are an opportunity for undisciplined, untrained traders who are attempting to teach people how to trade or attempting to purvey signals or whatever the heck they're doing with their lives. To just mislead individuals, in my personal opinion, by saying momentum long, momentum short, and making that sound like because they use the word momentum before the word long, that there's some sort of discipline or strategy right? Like, oh, we've reached a critical level at which momentum longing here is. We've reached a critical level of momentum, and now longing is the option because we're going to the moon. 99 out of 100 times in my research, what I've noticed is it's just a FOMO trade. It's just a FOMO trade, right? And you see very undisciplined novice traders make these mistakes. Don't be that person. So please, I'm going to try and remove those words from my lexicon. Keep me accountable for that, okay? Moving right along. Daily volatility expander rejection. We are currently testing the midpoint or the 13 exponential daily moving average, the 13 DMA, as almost said DMX. X gonna give it. Anyways, moving on. Thought of the Rick and Morty Summer and Rick episode where they get all jacked and then we'll beat some people up. So currently finding support at the midpoint. Kind of see how this plays off the daily. I would not like to see, and we'll look at the EMAs here in a little bit. I would not like to see price close on the daily below this level. That would be fairly negative to me, especially with the bullish engulfing candle and the kind of shooting star pattern that we are seeing. That's all going to be pretty negative. So we are building the fundamentals for a strong case for a continued short to the downside, which our other senior analyst, Da Vinci, and our whole team of analysts actually do have us prepared for a breakdown trade out of this area, a continuation short basically for us to get back into the position which we stepped out of briefly to faff around here for a little bit and go for the long. Okay, so let's pull that off, and let's keep that in mind that if that is the case, if this is the rejection up off of the upper band of the volatility expander, then the next area that we really have down incoming is 69.58 currently on the daily, where we would be looking to look for projections below that to enter to be taking price back up to the mean, which would be the 13 EMA in this case. Again, reversion to the mean strategy has been quite powerful in these local ranges, and then watching something like order flow to see when the buyers do step in. And some significant support is established in the market. So let's chunk that off. Let's look at the daily EMAs right now. And as we can see, the 13 and the 21, so the traditional primary and the tertiary baseline are really, really tight. And the 21 is over the 13 right now, which is not great. We would like to see at least the 13 cross over the 21. But again, we can get a lot of whipsaw when our EMAs begin to compress like this. And as we can see, the 55 just creeping down and down and down and down upon us, right? And we can see rejection from the vicinity of the daily 55. We've talked about that before. So we'll look at this, the 75. Actually, hold on. Let's go back and look at that volatility expander. I did forget to mention something. So we can see that the upper boundary of the volatility expander is at 75.45. And I've talked about the breakout trade to 8K above 75. And that is still on the table. But of course, we do need to see price convincingly close or in or around the vicinity of 75.45, currently upper boundary of the volatility expander, to be taking that breakout trade up into the level of overhead supply, currently from 78.57 to 83.31. That's a wide range, but that's the HVN. It's also roughly where the daily 55 EMA is, however, drifting lower and lower and lower and lower. But again, we do sometimes have a tendency to overshoot that and break right through when we actually do recover. Remember, we've rejected from it twice. This is going to be the third test if we do get any bullish momentum up out of this area. So that'll be something to definitely pay attention to. Now, while we're looking at the EMAs, let's go back and look at the EMAs. Again, remember that in my opinion, closing the daily below these levels is going to invalidate my long trade setup. And I'll be looking, again, as I said, be looking for that continuation short entry to take price at the minimum of at least down to that $6,900 level, $6,958. Because that was, again, my original trade, right? You know, you guys can't see this, but sorry. You know, shorted this maneuver right here. We longed this maneuver right here, and we did short on this wick. And just this morning, we took profit on that movement and looked to counter trade to the upside. If we're wrong on that, which is fine, then we'll just look for the continuation short entry to take price back down to the bottom of the range. But right now, being patient. Now, while we're looking at the EMAs, again, I do want to look at what is going to be very, very negative to me. So we can see here on the weekly, we can see our levels of supply and demand nice and neatly laid out. And again, I've talked about the weekly baseline crossovers and cross-unders before. You have people talking about death crosses and golden crosses and all this kind of nonsense that I don't think works very well statistically. I've never liked most moving average crossovers. They just don't tend to work very well for me. But the weekly 13 and 55, so primary and secondary baseline crossovers and cross unders, are, with Bitcoin, very indicative of the dominant trend and continuation of the trend. And the 13 is not far away from crossing under the weekly 55. Now, the weekly, keep in mind that we've missed about half of the downside movement so far if you were waiting for a signal. Of course, we haven't. We've caught a lot of this movement. And very similar, the weekly 1355 crossover to the upside would have only gotten you in a little bit over half of the movement to the upside. Still would have left plenty of room for you to catch a profitable swing trade on Bitcoin, moving all the way up to 14K. But you would have been hard, you wouldn't have gotten in at the bottom. Excuse me. So very similarly, what does the weekly 1355 cross under represent? Again, I think it represents a very strong case for a movement down to that weekly 200 simple moving average and the monthly 55 exponential moving average. And of course, our primary level of demand down there at about 5,000. Okay, the actual area being 61. And the actual area being 53.11 to 49. And again, we've talked about the 4.9K target, which is actually where the monthly sell signal on PTP actually pointed us down to at the close of the November month. So just kind of faffing about now below the weekly 55 as we kind of wait for the incoming. And again, we've talked, remember, at or so either directly before or at or a little bit after the actual cross under, we can get a reactionary movement back up to the level of the cross under for rejection. So if we get that weekly cross under, will I take a long back up to it if I see order flow turn bullish? Yes. But will I be looking for the breakout trade? Will I be bullish, macro bullish? Absolutely not. I'll be looking to, again, as I've said many, many times, looking to reshort from that level of overhead supply for a full on risk trade. Let's go down to the, all right, so let's go down to today. Let's go down to today. Again, we did have some, we're going to look at a few other things here before we go to break and come back and look at the news. But the couple things that I wanted to point out were down here on the 30-minute, we did get a Parallax is a fantastic divergence OBOS indicator. It's the only one that I use. Now, anyways, this is one of our proprietary indicators. So we do have bullish divergence, regular bullish divergence on Parallax. Again, every time that we've seen this before, we do get a nice ascension to the upside. We are kind of winding tightly. This isn't the greatest thing that I would like to see. Again, being quite patient, order flow hasn't heavily turned against us. We haven't seen the seller step in. This is going to be the, after the previous consolidation, this is going to be the second wave down. And I've talked about don't buy the first dip. This is actually the second dip. So I think we're kind of good here. And on a macro scale from the top, this would actually be the 1, 2, 3, 4th dip. So let's see. A strong level of demand. This is the local point of control, especially if we look at VPVR. Out here a little bit. Right, bounced beautifully right off the local point of control. So now that level 7208, and we've kind of talked about that's the important level that we want to hold intraday. 7205 for me, and this is actually where I wanted to long from yesterday. Looking at the chart, looking at the volume profiler, but we got to hold this level. Getting below 72, I'm not going to be. I'm not going to be continuing to buy the dip. That's going to be invalidation of my trade, and I was wrong, and I'm going to be looking to get short as quickly as humanly possible. But for right now, I think this represents a good, this is obviously the good bounce entry, and we've got some upside targets as well. So not right now, we're still in reversion to the mean zone. We're not trading a buy signal off of the Hashrams or anything like that. We're not macro bullish. We're still actually macro bearish, and we're trading the range right now as our current strategy for actually making money off of Bitcoin right now. I think that people who are determined to be making money off the breakout or the breakdown, you guys are stepping over dollars to pick up pennies right now, right? Simple. Reversion of the mean strategy. So we're just trading the range, doing so quite well. And I think a lot of the members are actually quite happy about this because, we've put a lot of work into the reversion of the mean kind of system and how we've aggregated order flow data or looked at order flow data and, allowing that to influence our trades with a little bit of discretion from our analyst team. And as such, we've been able to catch some really profitable movements just over the last week. And I think a lot of the members are really, really happy about that because now they're getting these kind of additional intraday Bitcoin trades on top of the swing trades that they've been getting for a while. Forever. But anyways, all right. So we talked about that. 6,900. Talked about our trades. The other thing that I want to point out is over here on tensor charts, we can just look at this. What's really interesting here on tensor charts is this beautiful, beautiful sea of bids, right? So this kind clearly pointed out, this is one of the other factors that I was looking at when I was looking at order flow, and then obviously looking at the books and how they were being stacked. The books just chunking up really, really beautifully, and more. Even though the limit books, the limit entries on the books, this is something that will move up or move down depending on order flow. When you see the historical snapshot of the order books really, really, really thicken up right around here, it lets you know this is definitely this is a level. And you could have, if you were watching something like Agritrade, which we'll go over and look at in just a second, you're looking at the, even though the bears were ripping right through it, all of that volume did get absorbed. It's kind of like it's like a stop track. Like, you need, the limit orders are the barriers to momentum, right? So you have aggressive market selling pushing price down, and you have these really thick buy orders absorbing price. And as we can see, volume has started to die off. There's only been 2.5 thousand Bitcoin sold to 1.7 thousand Bitcoin over the last minute, aggregating data here from XPT. And this is prior to this, a couple hours ago, this was 7.5 thousand, right? Compared to 3.2 thousand. So the sell volume has diminished, and I think that is again a good case for the bulls here in this local area. Now let's go look at let us go look at Agritrade, and let's this. Okay. And as we can see, we've seen, if you've been watching the trade aggregator over the course of the morning, you can just see that the continual aggressive market sell flow. But that has recently bottomed out. I did have to refresh this. I apologize. So I lost some of the previous data, but now we can see something different. So over the course of the last hour, we have seen the majority, we have seen the aggressive order flow largely been in the hands of the buyers. So another good thing, the volume delta has largely remained positive, and we just need to see how long the bulls can keep the volume delta positive and actually push up and break through. But again, as I said, holding 7,200 is critical intraday, a breach of that level, and we will be looking for full risk short opportunities. And as I said, our senior analyst, Da Vinci, does have our backup trade. Now that is based off of his analysis. It's a beautiful head and shoulders validation on the breach of 7,200 per his metrics. So that's where we're going to be going if we're wrong on the counter trend long. In addition, again, as I said, the weekend was really good. Last night, positioned for some altcoin trades for the upcoming week, some nice swing trades. We also caught the reversal on Bitcoin Cash, been waiting for that for a while, and established ourselves for a few swings. So overall, a really good weekend for the premium trading group. And we talked about the breakout trade above 7,500. So that's where we're sitting today, guys. That's where we're sitting. So we'll just go back. We'll go back and we'll monitor price. And we've got about 10 minutes before we go to break. When we come back from break, we're going to be talking about Google. We're going to be talking about crypto kind of censorship here on YouTube. I think this is a great opportunity for us to go ahead and take a look at Mr. Eli's request. Thank you again so much for the generous donation, my friend. So let's go take a look at Mr. Waves. Let's see here. Well, let's see. Parallax flipped for a bullish trend here. We reached the overbought level on this candle, and then returned back into neutral zone. Returned back into neutral zone here on the closure of this candle. So that's, just a beautiful swing trade right there, even going from candle close to candle close. What is that? That's about 40%. Now, obviously, if you would have been scaling out here, we captured an additional 30%, which is quite good. Pretty aggressive selling on that. Some consolidation and current breakout to the upside. So let's look here. We do have rising volume overall. The volume moving average is still moving to the upside. Wadatar explosion is largely okay with it. We did flip back bullish here on this candle. Wada also gave us a powerful buy signal. We did have to suffer a 5% open to close and overall volatility from closed down, about a 10% correction. But overall, I think this looks good. Waves is, I don't actually have Waves on my day trading list. Perhaps I'm I'm slipping with that. I know that a couple of the other analysts do, so maybe that's why I haven't focused on it so much. There's a couple I was looking for. I've identified other opportunities, at least for myself, that I prefer. But yeah, I think that I don't see a setup right now. And I talk about this before. I know that Da Vinci would look at this and see, he would see a pennant and a breakout of the pennant, and which actually is not a bad idea. Breakout of the pennant, pull back, and finding support on kind of that breakout zone, and then push to the upside. For myself, what I'll do for you, my friend, just identify what I think are going to be the danger zones. This is pretty good. So basically just getting over the last chunk of overhead resistance right here on the volume profile. We don't really have anything till this zone right here. So we can see that, when we kind of zoom in on this, that is our new point of control. That's going to be 13,890 sats. So I definitely want to hold that area. I'd be looking to get out of the trade if we fell below that area. So if we're really going for a breakout trade, so again, remember, if this is a breakout and we've retested our breakout level as new support, you don't want to be going below your basically initiation level of longs that have entered into the market. So next zone for taking profit, if we're just looking at overhead supply, it's going to be 16,160 to 17,330. So from current price, that gives you a nice another about 14 to 15% to the upside. And I think from where we're currently at for where your invalidation level would be, which is about 5 to 6% to the downside, obviously represents a great R to R, at least a 2 to 1 on that. So again, I think you can hold the trade open for that. If you're just looking to catch swings, then again, we can just do something like, if we have something like Parallax, we can just try to identify oversold conditions in the market or significant trend line bounces to be re-entering into the dominant trend to the upside. So let's look at something like the baseline, which is what we use for this purpose. And what is this going to tell us to do? And again, beautiful thing right here. Break of the baseline, re-entry signal, and we take the reversal baseline bounce because we were actually above the qualifying line. So bam, beautiful re-entry back on the trade qualifying line. That is currently sitting at 13,300. So that, I think that option's off the table, especially because we do now want to hold that 13,830. So obviously we don't want to take the reversal bounce now. So yeah, that's kind of the two setups that I see right now. Two setups. If you're long, I think that you can hold the trade and get out of the trade below 13,830. You can either say, I'm not in the trade, I'm just going to wait for reentry opportunities on the lower time frames when price becomes oversold to reenter into the trend, or you can look for reentries on something like the baseline, which is currently sitting at 13,330. But in this particular situation, I wouldn't want to see price come back to the baseline now because we've already had the breakout, retest, boom. So BPC, I wouldn't want to invalidate the break, pullback, continuation trade setup right now. So again, the only overhead resistance that I see is currently sitting at 16,160, 17,330. I think that's a good take profit opportunity or area on this if we do end up running. And Parallax on the daily here has flipped bullish again. And again, if we can go back and look, kind of zooming out on waves here. Again, good breaks to the upside. You can see that we have broken the overall point of control for this consolidation area, even complete with a nice little spring here on huge volume. Great volume coming in on waves overall in this area. It's pretty good, man. Good entry. And then getting back above that, the next level that we're going to be looking at is around 21,890. So let's see if we can break that last little chunk of consolidation here. And then again, I don't really see anything except for this little bobble right here and 26,000 getting above that. Nice, good long swing opportunities. I mean, this is kind of a good classic breakout trade, just looking at it, right? Break above the point of control, pull back, and continue breakout. So good. Overall good, man. Overall good. Waves looks good. $12.56. Thank you so much again for the $10, my friend. Highly appreciated. All right. Before we go to break, I want to look at some. I want to look at some amusing musings of the day. Going over to Twitter. This is what starts my day. Coming over from Inverse Bra. We need more people like him. More people like this guy. XRP Beliveratos. And he says, less than 48 hours to go for my plus $1,000 XRP prediction. I'm one of the few that never change dates, and I'm still sure of my prediction. HODL XRP. Stay strong, XRP community. So he has a $1,000 end-of-year price prediction for XRP for the year 2019. This is not 2020. This is 2019. So he fully believes that XRP will be $1,000 by the end of 2019. He has less than 36 hours to go and counting. Will he make it? Will XRP put in the greatest rally of all time? Stay tuned. We only need 36 hours. He says, I just believe that the value goes up before the law goes in. It's not weird at all. Also, with economical crashes, they hide it until the last second. Yes, they hide the plan to pump XRP from 19 cents to 1,000 in 36 hours. Well, XRP better get going because it's got a lot of groundwork to go. So he's at Mitch Zanting, if you guys want to go see this for yourself. And he tweeted, the people are complaining a lot about my previous tweet. They only forgot some factors in their, spelled THERE, calculations. Failing economy, burn rate of XRP, offline APIs that can open any moment. Everything is ready. And he in his description, he calls himself a Forex trader. He looks like he's 14, but we're seeing a lot of this, unfortunately. An XRP supporter in thou seest. In thou seest. Public school, man. Public school. And when we return, we're going to be watching Rhythm Trader posted this earlier, exactly what is quantitative easing. It's quite the take. But we're going to take a quick break, guys. When we return, again, we're going to be talking about YouTube. We're going to be talking about Google. We're going to be talking about MetaMask, as well as taking your chart requests and answering your live questions here on the stream. Don't go anywhere, guys. Before we get to break, a word from our friends over at Bybit and a check-in with our friend, Midwest Attempts. This is Jason, when he first learned about Bitcoin margin trading on BitMEX.
Why? Why? Give it back! Give it back! Give it back!
This is Jason 6 months later after signing up for Bybit with the Cracking Cryptocurrency referral link found in the description below. Don't make the same mistake as Jason. Sign up today at bybit.crackingcryptocurrency.com. And we're back. Thank you guys so much for hanging through the break. The first thing I want to do, as we do when we come back from break, is reward our loyal viewers over there on DLive by distributing some lemons. Thought I put those lemons in the crate earlier. Okay. For some reason, it's just not showing the updated lemon chest for me. Let me give the screen a little bit of a refresh. Oh, whoops. I pressed the wrong button. Sorry about that, guys. There we go. Oh. This is when I pressed F5. It did such a thing. All right. So let's distribute these rewards. I actually put an extra 50 in there. So early New Year's Eve present for you guys. Distributing the rewards to our loyal friends over there on DLive. Shout out to you guys. Come on. I'm clicking the button. Okay. Seems like I am doing the giveaway. We'll come back to this in a moment. Congratulations in advance, all my friends. Gravy, Grits and Greens. Thank you so much for following over on Twitch, my good friend. Welcome to the community. And we've got Bede. That's a long name. But Bede, thank you so much for the subscription on YouTube, my friend. By the way, hey, we did it, guys. 7,000 subscribers on YouTube. You guys are absolutely fantastic. Thank you so much for pushing us this far. It has been a heck of a journey, and we get to start off 2020 strong, 7,000 subscribers, all of you individual and unique and awesome. Thank you guys so much for your continued support. So happy, man. Okay. Let's see here. All right, awesome. Okay, so let's get into today's cryptocurrency segment, guys. Let's go. All right. Our first story is coming to us today from cryptobriefing.com, and I'm going to kind of speak, as I said in the opening segment, about the larger implications of this. Now this article is entitled MetaMask app removed by Google, is crypto under attack? Now, the reality is YouTube is facing some stiff criticism from the community for its purge of crypto content. Now we can see that another Google service seems to have taken down the prominent application MetaMask from the Play Store, which is raising eyebrows and concerns that the big tech company Google itself might be targeting the cryptocurrency space. So earlier last week, as we talked about last week, many prominent crypto YouTube channels received community guideline strikes, saying that they were promoting harmful or dangerous content, and seeing their videos removed and flagged, as I said, harmful and dangerous. Now, even Ethereum co-founder Vitalik Buterin revealed his recent Ethereum 2.0 roadmap and Q&A video that was affected by YouTube's enforcement action. Obviously, individuals like Chris Dunn, Ivan on Tech, these were people that were heavily influenced by this action from Google. Now, since then, the video sharing platform has reportedly, they have admitted that crypto-related content was taken down by mistake. Many of the affected channels are reporting their videos have been restored and the strikes have been lifted, except for the ones that actually violated community guidelines by promoting things that they're not supposed to promote. It's right there in the terms and service. A YouTube spokesperson who commented on the recent crypto purge asserted that the platform's policies on crypto-related videos hasn't changed, but conceded that mistakes were made. There's good people on both sides. Quote, with the massive volume of videos on our site, sometimes we make the wrong call. When it's brought to our attention that a video has been removed mistakenly, we act quickly to reinstate it. We also offer uploaders the ability to appeal removals, and we will re-review the content. Now, while YouTube seems to have taken some of the pressure off of the crypto community, another Google-operated service, the Play Store for Android, went on to suspend the Ethereum-based wallet and dApp browser MetaMask. Now, citing deceptive services and claiming that the app mined cryptocurrency on the user's device, Google's latest move to pull MetaMask from the Play Store has led many to wonder, though, if despite their claims that they are not targeting crypto-related content, if Google itself is deploying a censorship offensive against the crypto industry, or at least against content creators in general. MetaMask commented on Twitter, quote, MetaMask commented on Twitter. Okay, I guess I don't have that quote here. MetaMask did comment on Twitter that, quote, this isn't the only sudden and unexplained ban that Google has issued this week. There was also a sudden ban of many crypto YouTube accounts. Google may be testing the crypto community's resolve. Hashtag protect Web3. Now, for those of you who have been living under a rock, MetaMask is an Ethereum wallet that includes advanced features to interact with decentralized applications and smart contracts on the Ethereum chain. Supposedly having violated the, quote, no mining on devices policy, MetaMask claims that its appeal has been rejected, despite the app being open source and having no mining functionality that has ever been detected in any public audits of the code. Some are wondering if this is related to the controversial Hex project, which was a new Ethereum-based staking coin that is in some sense, quote, mined, end quote, into existence by transacting with a smart contract, hypothetically speaking, typically done using, as Richard Hart promoted it, to utilize the MetaMask wallet, although you don't have to use the MetaMask wallet. Now, having debuted earlier this month, Hex has attracted a lot of negative attention, some of which may have unfortunately spilled over to MetaMask, and some of which unfortunately may have spilled over to the entire YouTube content creator community in general. Now, MetaMask, while not directly involved with Hex whatsoever, it's an open source Ethereum project and is a largely anonymous and agnostic third-party application, was likely the popular Ethereum wallet used by many for the purpose of interacting with the Hex smart contract. Again, this is the wallet. This is the wallet and application that Richard Hart showed everybody how to utilize. Perhaps the mining activity that is being cited is the reason for their removal from the Play Store. We can only speculate, but again, I would say that potentially the attention that Hex generated and the potential backlash that Hex has generated might have unfortunately spilled over to individuals like myself, although my channel was not directly affected by this recent purge. Now, however, MetaMask has revealed that this was not the first time that they faced scrutiny from the from the Play Store, but this time it does appear quite serious. The MetaMask developers have affirmed that if the ban is not lifted, they would then utilize other platforms to disseminate the MetaMask application. Now, following on the heels of the YouTube suspensions, many are suspicious of the timing of the MetaMask removal, even people like myself, and wondering if it's part of a wider censorship campaign by big tech, Google specifically, against the crypto space. Google App Store, the Google Play Store, has been especially strict about crypto-based applications, especially those offering financial services. Google Play has hosted multiple legitimate apps, but has also faced fakes and wallets that hijack keys and assets. Of course, this is a huge problem. People trying to push malicious applications into the Play Store so that they can be commonly downloaded by individuals. Sounds like a black hat's delight. Other crypto apps do remain hosted in Google Play. This wasn't a complete purge of crypto applications or anything like that, but there is a new approach to presenting them. If you guys look at the search function has been disabled for cryptocurrency terms, making it more difficult for a user to discover the apps and wallets. This policy is especially hard on the Ethereum ecosystem, which is still the most popular smart contract platform for cryptocurrency and token activity, decentralized finance, blockchain gaming, and other use cases. Now, unfortunately, MetaMask has not released an APK for the version of MetaMask. So the only option left to Android users is to build it from source, and this is just not going to be. So you can do that. But unfortunately, this is not going to be an easy turnkey solution, which MetaMask was designed to pick for Ethereum chain users to be a quick and easy turnkey solution. So currently, until they release an APK and host it on a public download site or on a download mirror, it's just not going to be, unfortunately, available to the wide stream of Android users, most of which are not building from open source savvy, right? Fortunately, many of us in the cryptocurrency space utilizing desktop wallets or who haven't been involved in cryptocurrency since around, I'd say 2016, especially earlier, we've kind of learned how to do that because back in the day, there wasn't an option. But let me know what you guys' thoughts and comments are on this. I'm personally ambivalent. I really like to move slowly with my accusations or allegations. But again, I want to get the conversation out there and get your guys' thoughts and opinions on this and just help you think about the future. Again, we've talked about the many times. We've talked about the only way that this goes down with Bitcoin in particular, or decentralized currency becoming the replacing traditional currency. And again, we've talked about whether that happens in 20 years or 50 years or 100 years or doesn't happen at all. But if the goal for this community largely is to replace traditional finance or the traditional monetary system with cryptocurrency, you guys have to understand that that ends in a battle. And unfortunately, the opponents in this battle have a lot of leverage and weight to throw around. They're not just going to go silently off into the night, T.S. Eliot style. What they will do is they will leverage all their weight and muscle against the cryptocurrency space if they do legitimately feel threatened. Currently, we are in a stage of attempted co-option, right? Very similar to what we saw with price suppression of gold and silver prices by things like the Chicago Mercantile Exchange and cash settled futures throughout the course of the 20th century, moving more lately into the later 20th century since the 1970s. But that's very well known. That's probably the largest financial manipulation in modern history. There's only one way. There's only one way the journey ends, guys. That's with the battle. You guys want to win. You guys got to fight. So get out there, be active, support the platforms that you support the platforms that you utilize, support the content creators that you follow. And again, as I've talked about many, many times, if we're going to self-regulate, if we want the right to self-regulate, if we want to deserve to be self-regulated, we have to self-regulate. We have to do so responsibly. So, everybody needs to be active at decrying scams and spams and making sure that information is public, not utilizing malfeasant or malicious or unethical approaches to making short-term gains. Again, there's great gains to be made in the cryptocurrency space, and you don't need to be malicious or have ill intentions or use unethical means to garner those gains. You really don't. You really don't. And those individuals do not win in the long run, even though they do win in the short term. And it makes people feel like that's the only option, but it's not. It's not. And done quite well in this space by being consistently patient and strategic and ethical. So I encourage you guys to do the same. But let me know how you guys feel. Let me know your thoughts in the live chat and in the comment section down below if you're watching this later in a Breaking Bits segment. All right, now on to the next story today. All right. Our next story today is going to be focusing a little bit more on Apple. And Apple, this comes to us from thedailyhodl.com. Title of the article, Apple may stop millions of dollars in crypto from being accessed on its devices, says the CEO of Coinbase. Now, Apple appears to be ending support for decentralized applications on iOS devices, delivering a potential blow to the blockchain industry. And this coming to us according to the Coinbase CEO, Brian Armstrong. Now, in a reply posted to the Ethereum subreddit, Armstrong explains why Coinbase is removing decentralized application or dApp functionality from their Coinbase wallet that is available on the App Store. Quote, Apple seems to be eliminating the usage of dApps from the App Store. If Apple customers want to be able to use dApps, we may need to make this request known to Apple in some way. Now, dApps, or decentralized applications, is a term used to describe any program that is built to run on a blockchain network and functions without the control of a single centralized authority. Now, they operate on a smart contract platform such as Ethereum, for example, and a wide variety of decentralized applications have emerged in recent years, including decentralized cryptocurrency exchanges for trading, betting platforms for gambling, games, and financial instruments, the decentralized finance movement. According to Armstrong, Apple has a shifting stance on decentralized applications, which will likely have a big impact on decentralized finance moving forward, which of course is an emerging industry designed to utilize and harness blockchain technology to give users access to financial services such as savings and loans without the need of a centralized authority or intermediary. Now, although users should stay informed and developers should remind them to safely back up their keys and accounts, Armstrong warns of the possibility that these decentralized application users on Apple products may find themselves suddenly barred from accessing their crypto holdings through the means that they're typically used to, potentially jeopardizing millions as they kind of scramble to realize, oh, hey, it's not in my funds aren't in MetaMask. My funds are on the private key, or I can access my funds with the private key. The funds are it's just data on the blockchain. Now, this is, quote, this is an important era of innovation in finance. And many developers and early adopters of this technology have millions of dollars worth of crypto tied up in these financial applications, which they will no longer be able to use on Apple mobile devices if this App Store policy continues, end quote. Now, These concerns, ironically, of dApps getting pulled from the Apple App Store come just days, of course, after Google banned the popular Ethereum-based wallet MetaMask from the Play Store, as we just discussed in the previous article, which again leads a little bit more flame to the fire of are big tech companies gearing up or now engaging or testing the resolve, the mettle of the cryptocurrency community, and engaging potentially in a new policy of enforcement on the crypto industry. If they're testing the waters, then the pushback needs to be strong, and it's on us if the pushback isn't strong enough. So again, as with the previous article, let me know your guys' thoughts and opinions on this. Are these things correlated? Are they related? And is this something that we should legitimately be concerned about as a community? And question of the day, what's the right course of action for a regular user? What's the right course of action to take in this scenario? What should you do, right? As I talked about, we need to self-regulate. If we don't self-regulate, we're doomed. So leave a comment down below and let me know, let the team know what you think or what you are doing to kind of protect the space, to protect the community, and to kind of push back against this aggression. Are you opening up a support ticket? Are you writing a hotly worded email to Apple and Google telling them how much you love crypto and this will not stand? Are you going to be migrating to a decentralized platform such as DLive or DTube? Let me know in the comment section down below. And we'll randomly pick a winner who leaves a comment like that, actually giving us an idea of what their plan, what their strategy is. Will win tomorrow's crypto comment giveaway for 8,000 XSPC coins. All right. Now, our last story of the day is going to be looking at Bnb, one of our favorite coins to trade. Binance Bucks. It should have been named Binance Bucks. I don't know why they didn't name it Binance Bucks. It's Binance Coin. BNB should be BNC, but that's Bancorp. But Binance Bnb. Looking back at BNB, obviously for the year of 2019, reveals it to be one of the more robust altcoins in our space, currently positioned at number 8 on the coin market cap ranking list. Now, back on July 18th of this year, BNB was made available for margin trading on Binance. And at the time of the announcement, if you'll recall, Binance CEO CZ warned users not to short the exchange token. But how has it fared since that announcement? And would have counter trading CZ's advice have been the best strategy for BNB hodlers? Now, the bear market of 2018 obviously saw many altcoins get absolutely routed. But BNB developed the reputation of a safe haven altcoin in those troubled times, with price bottoming around $5 that year per coin. So, obviously BNB was well positioned as a respectable altcoin going into 2019's market bull run. And this resulted in a pretty spectacular run up on BNB, up to about $40, but ended in an equally spectacular sell-off, bleeding out to below $15 just a matter of a few months. Now, had we listened to Binance's own CZ this year, our BNB holdings could have suffered serious losses. On July 18th, 2019, Binance officially announced that it would be offering BNB for margin trading. In a follow-up tweet, as I said, CZ celebrated the development and recommended that users do not short BNB or else they will get wrecked. Capital REKT. At this time, CZ did, of course, receive some criticism for trying to influence the market price of his own platform's token. However, it is now clear had traders just counter-traded CZ and actually shorted BNB, they'd have been rewarded quite handsomely. A recent tweet from @Carbonbase began trending last week, casting shade on BNB's performance since margin trading became available, showing that the token is down roughly 54% since CZ first made that tweet. And in hindsight, this does seem like the most obvious counter trade of 2019. If you had been shorting since CZ's tweet, your BNB position would be closing out the year strong with some substantial profits. Now, due to CZ's failed prediction, a new meme is emerging in the community, poking fun at CZ by bestowing him the title of the new CNBC. CNBC obviously has gained notoriety in our space for making terrible calls, and many traders consider it an effective strategy to counter trade the media outlet. Now, all jokes aside, BNB and Binance is still a boss in the cryptocurrency industry currently. Binance not only leads the market in trading volume, but their BNB token still holds a market capitalization of $2 billion. Now, depending on what your long-term prospective holds are, BNB may be poised for a strong 2020 performance, or perhaps a further decline down to test previous lows below $10. Depend on your own analysis on that one. But either way, it's been a pretty exciting ride for Benbow over the last couple of years, and for us particularly as traders. So again, let me know your guys' thoughts and comments on counter trading CZ. Did you counter trade CZ? Did you guys get in on this BNB short action? Again, always good speculative plays and setups on the larger coins. With that being said, guys, that ends our cryptocurrency segment. And now today's question and answer segment. So yes, I know the pounding of the desk. I'm sorry, I'm a little excited. It is Monday and I love Mondays. I'm a Monday person. I'm a morning person. I love it. I do. I wake up just like this every single day. What's up? Come at me, bro. All right, so let's kind of watching out of the corner of my eye. Bitcoin getting a little bit of punishment, getting a further leg down to about a little bit below 72.25. Let's go back over to the charts. Again, basically a retest that we're seeing right now of the point of control. Buyers currently holding it up above. And again, definitely watching for that breakdown. I will be quick like a cobra to reshift my position. Currently, it has not happened yet. As in all things, patience is key. Now, let's go down and see what we have for the question and answer segment. And let me know how you guys are doing in the chat. Okay, I did take a look at waves for Mr. Eli back. Let's go ahead and answer questions first. And then if I have time, I will do chart requests. I just see a current question from Jap. He says, I never replied to him about the last giveaway. As I said, yeah, just get if you've messaged me in the Discord, I know that you hadn't messaged me as of last night because I go through my message. I try to clear them out every day. If you've messaged me this morning, I apologize. It's Monday morning, working with the group, working with the members, working with my team. If I haven't replied to you and you have messaged me in Discord, then I will get back to you. I definitely promise. Both, I think it was Paul Bob the Builder and Jap were the winners of the previous crypto comment giveaway. You guys never got a hold of me over the weekend or over the Christmas season, so I didn't have an address to send them to. If you did get a hold of me, I apologize. That's my mistake. Just ping me again in the Discord, my friends. Send me your deposit address for XSPC, and I will send those this evening. All right. So our first question is from Benjai. He says, I mentioned a strategy to go back short if my long does not pan out. What steps do I take? Question from Benjai. So I'll be following along with Da Vinci's setup, which is, to the best of my knowledge, I'm not going to go into the particulars because I do want to leave that to the members because that is his premium signal and premium setup that he's announced. But he has charted out a head and shoulders pattern. He does trade head and shoulders patterns. He has a metric for on what time frame close he would like to see a certain level get breached, and when that particular time frame candle closes below that level, he will market enter into a short and set his targets and set his take profit, and that's it. If this, then that strategy. And again, he's very, very good at what he does. So I will be following along with him because that is a better setup than what I currently have. Plus, I'm going to be being a little bit active here moving into today, so I don't really want to be. I'm not really going to have the time to watch the charts and look for something like an overbought condition to then re-enter into the market. But that will be the setup, Mr. Benjai. Thank you so much for the question, my friend. Bob Smith says the US dollar just fell out of its trading pattern to the downside, not by a lot, but it did. Says, teach it out, bro. You're awesome. Thank you so much, Bob Smith. I highly appreciate that. Mbait22 says, momentum shorting at 100x. Got it. Thanks for the tip. Do not recommend that, my friend. Cetra says, LOL at once in a lifetime signal, and then followed by an expletive. Yeah. Got to get you guys in here somehow. Mario Casanova says, don't trust YouTube ever again. They will likely do more purges. They keep purging other groups of people besides crypto. YouTube dislikes freedom of speech. I'm not going to say that I disagree with you. I will say that, as in all situations, and I talked about this a lot before previously, as in all situations, the world is just not black and white. The world is an entire gray area. For example, I find often this, and this is the realm of politics. I don't want to step into politics because those conversations don't end well. And this is a safe place for trading. It's a safe space, guys. But often individuals on opposing political spectrums will visualize the other entity as evil. And we can see all kinds of examples in this in modern media. Black Mirror has a great example of this. I can't remember exactly what the episode is called. I think it's the Dogs of War or something like that, where individuals are actually utilizing an implant or psychological training. It's a technological implant in their brain that makes them perceive the opposing army as monsters. And therefore, they feel no empathy for killing a monster because you don't feel bad for killing a monster. But then the plot of the story is that the one individual, the protagonist of the story, realizes or gets that deactivated somehow and realizes that the opposing enemy is actually human beings. And they have been psychologically brainwashed or technologically brainwashed to make them more efficient soldiers. And that's the reality. And this is kind of a psychological discipline training that goes back to Sun Tzu's The Art of War, where it becomes very, very difficult to actually win a war if you cannot convince yourself or convict yourself that the other side is evil. And so that's definitely one way to look at the world. You can say that, all right, listen, at the end of the day, all the, hey, good people on both sides, blah, blah, blah argument, that all sounds good. That's great for the history books. But look, I'm over here and my best self-interest and my group preference's best interest is in my side winning. So we're not going to sit here and have a civil discussion because we're going to smash the opponent. They're evil. We're going to destroy them. There's going to be no conversation. No quarter is going to be given. We're just going to destroy them utterly because they're evil. And the only way that you can really do that, the only way that you can really just wipe out an enemy force without, with full efficiency, right? But without compassion or without empathy, is by conceptualizing the opposing force as evil, because you don't have empathy for that which is evil. And I find that that is a very effective way to win wars. But I find that it's not a very effective way to live life because, we don't gain anything by hiding from the truth. And I think that one of the points of social evolution or growing as human beings, growing as we grow and evolve socially and personally, is getting rid of these things that we've done continually throughout society to lie to ourselves, to lie to our children, and to lie to each other. Just for the sake of convenience to get stuff done. I find that we will get closer to the truth and get closer to a better standard of living universally by approaching the actual truth and looking at reality in front of us and actually finding innovative solutions to the actual problem, not with saying, oh, the problem is I just need to smash this opposing force over here. Let me conceptualize them as evil and spread propaganda that the opposing force is evil. The reality is that there are always good people on both sides and evil on both sides. There's never been any situation in reality and history where one side was totally good and completely oppressed and one side was completely evil with no benevolence whatsoever. So do I think that everybody at Google or YouTube, just has this, policy out for to ban crypto? I think that's honestly ludicrous to think that. Remember, YouTube based it right in the heart of exactly where Coinbase is located, and Kraken, and all of these other cryptocurrency companies, right in the little golden valley there of California. Many ex-Google engineers work at places like Coinbase. It's just kind of the shifting, revolving door of engineering, and cryptocurrency is actually pretty popular at YouTube because it's popular in California, because it's popular among the technology enthusiasts. Now, of course, is YouTube subject to downwards facing political pressure from Google? Of course they are. Of course they are. Just as Google is attempting to influence politics on a global scale with their platform or with their multiple platforms. Like this is obvious. This is pretty well known. It's pretty hard to dispute this. And do I think that they're doing so because they're evil? No, of course not. I think that they're doing so because they genuinely believe in their convictions and they're trying to spread, proselytize, and promote their way of philosophy or their style of thinking. And it's not all uniform. There are individuals that are in powerful positions at Google that probably disagree with one another. And we kind of also have to be cognizant of the political climate that we're operating in. So, the idea that there's this campaign against cryptocurrency from Google, I think is silly. I think that there may be some downwards or restrictive pressure on Google or from Google to YouTube, which might make our lives uncomfortable and does lead credence to a lot of clickbait conspiracy theories. But I think that the idea that there is this massive conspiracy, particularly at YouTube, against cryptocurrency, when I know for a fact that cryptocurrency is spoken with by enthusiasm by individuals who actually inhabit those job positions, I think is kind of silly. Now, that's not to say that there may not come a tipping point, because again, Google is going to be exerting downwards political pressure on YouTube, and YouTube is going to execute based on what their owners and operators want them to do. And so there might come a time, as I talked about with the battle, that is inevitably on the horizon, where we will inevitably, where YouTube or Google will be forced to take a side, and they're going to side with the American government. And if the American government looks to influence the public perception or the propaganda perception of cryptocurrency, because they are now making their aggressive move against cryptocurrency in an attempt to ban it or subjugate it or regulate it. Right now, they're trying to co-opt it, which is good. It's better than banning, especially at this stage of development. Then that'll be a reality. So I don't know. I'm sure there's a lot more information on this may or may not come out related to this particular purge. And are we probably going to see a few more punitive purges? Yeah, I think that overall, I think that YouTube is going to be cracking down on a lot of the stuff that YouTubers have done. Especially because this whole decentralized finance and a lot of this stuff is new, and potentially some of it is harmful or malicious. It's just very hard when you have something really, really good, but unfortunately there's this huge wash of harmful and malicious stuff. Sometimes the most efficient answer is just to be like, well, okay, no, none of that until you guys can clean up your side of the street. Just no, not here in the public space, not in the public square. You guys go make a, what's the word I'm looking for here? What do they call what do they call that back in Prohibition, where you go to drink? Holes in the wall, you know what I mean? Speakeasies, right? You guys go make your speakeasies, and you guys go pursue. And this is, again, I've talked about this before. If we could be a little bit better about self-regulating the garbage in our own community, I think that a lot of these fronts would be working a lot better. But it's really, I'm sorry, some of you guys may disagree with me, but I'm really against kind of the conspiratorial thinking. It's not productive. It's not healthy. There are no Illuminati lizard lords. There is not some evil massive force that is, suppressing everything and out to get us. It's just not the way the world works. It's really convenient. It's a childish mentality of the world. It's a really convenient way, as I've said, to justify your own existence, to justify your own purpose, and give you conviction, and give you belief, and give you courage. All of these things. They are helpful psychological tactics that you can utilize on yourself and on a population. But it's not reality. Reality is gray. There's the perception and truth and good and evil. They're subjective. Nobody has definitive answers about the origins of the universe or the purpose of life or the meaning of life. And as such, human activity falls into a wide variety of gray bands. There's no person on earth that is wholly evil or wholly good. Everybody is a mixture of gray, and as such, every single movement, every single force is also a mixture of gray. So, like you see this a lot in religion. You see this a lot in, the far extremes of both sides of the political aisle type of thinking, that it's just, good against evil. And I will not promote that or accept that or allow that to fly or let that kind of slide by. So not to be harsh against this particular comment, I definitely can feel you and sympathize with you. The feeling of being oppressed by a company, by a policy, and it is. It's repressive and it's a pain in the butt. Does that mean it's malicious or evil in nature? Almost certainly not. Almost certainly not. Darren Garish says, when you take time during your podcast to belittle some kid on Twitter, hashtag relevance. Yes. Well, again, not every person is wholly good or wholly evil, you know? Hopefully he understands that we're laughing with him, not at him. Mario Casanova then continues with, unless more banks adopt it soon, XRP will likely go to zero. As soon as central banks start rolling out their own cryptos, effectively killing Bitcoin and everything else, probably they'll ban Bitcoin as well. I don't really think that's going to happen. I don't really see that. I mean, it can play out like that, but I don't see it playing out like that. I think that if Bitcoin goes into the shadows, it'll take longer to achieve adoption. But we have to understand that, listen, this idea that the government is this all-encompassing, all-impressive force that will always win for whatever, I think that's ludicrous. I think that's nonsense. I think that if we just look at the long-term trends, mankind adopts the best tool and pushes forward in societal evolution. You know, we're at the very first time where we have the actual technology to disrupt central banking and government monopoly over currency. And it's going to happen. It will happen. It's the more logical way to do things. It is the better way to do things. It is the better technology to handle the problem of sound money. But it's just going to take a while to get there because you have self-interest and opposing forces in the form of centralized currency and government monopoly over currency production and centralized banking. We can't just publish a white paper and sweep away the central banks. It's going to take a fight. And so you guys need to get motivated is what I'm trying to say here, because this is an investment and this is going to take some work, okay, to go from here to, Bitcoin flowing in the streets and decentralized world currency. And yeah, baby, we're going to get there. Granted, if there's anything that's inevitable beyond the heat death of the universe, it's that mankind does, given enough time, adopt the best tool for the job. Bitcoin is a better tool for the job for sound money than centralized paper currency and fiat currency. And decentralized finance is certainly a better alternative, a better solution, a better job for the goal of the current financial services industry. Yes, these are better tools. Like we know that they're better tools. We will adopt them given enough time. But that's the thing, given enough time. And we can accelerate or decelerate that growth curve with our actions and choices. Anton Libra says, look at how the S&P is trading today, and for some reason, Bitcoin of all days decided to trade with it. WTF. Yep, overall down day in the market. Monday open. I wouldn't say it's a down day. Well, clearly, the current micro trend is to the downside. I think the most important thing is, do we break current support or not? Obviously, we've predicated all our kind of current trade setup on this. Let's take a glance at we're kind of back at the real gap, though. Haven't made that descent into the weekly open yet, down below 7,100. We talked about that before as well, but we'll leave that for another time. Here's the CME futures. We'll just do it over here. Actually, go pull open the CME's traditional markets. Let's look at the SP. Let's look at the, this is the S&P 500 futures, the E-mini contract, continuous in front. And again, stock market at what we like to call all-time highs, baby, which again, just want to point something out, not to pat myself on the back, but this, I've been calling for this all year. I've been saying for a while that we were going to see new highs before we saw new lows. Very, 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 very consistent in that. Every time I was asked about the S&P 500, I told you guys I am macro bullish on the stock market. I have been buying stocks all year long. I told you guys about Money Monday. Overall, yeah. So I'm not going to be looking to call any market tops or market bottoms. And one thing that I will point out is obviously volume falling off as price is moving up is not a bullish thing. NQ having a little bit more of a violent reaction to the downside, especially on a daily reversal candle that we did get back on the 26th and getting the follow through on it currently right now. Good sell volume to the downside, especially on the NASDAQ 100 E-minis. And yes, Bitcoin of all days decides to trade with it. I find that it does typically, like Bitcoin does not, I have not noticed a strong counter trade component between the traditional markets, at least the futures, which just track the traditionals, and Bitcoin. I find that they move similarly. Did the Chinese buy YouTube? Asks Ricky Thompson. Don't believe so, sir. Anton Libra begging me to close my long. I will, sir, if it's a failure. If it's a failing trade. Ricky Thompson says, because if Apple cannot control it, they will prevent their customers from enjoying the benefits of other options. Very, very true. Very, very true, my friend. I will not be the first to disagree with you there. What trading platform do I use? This is TradingView. I utilize 3 commas to trade on. Binance. I trade directly on Binance USA and I trade directly on Bybit. But we're currently working on changing that. That's all I'll say about that right now. How much is it to get rid of the 10-minute delay? The last time I looked, it was $150 a year or something. It's actually $150 a month, give or take. It's like $1,000 a year. So no, trust me. When I renewed my TradingView subscription, I did seriously consider getting the CME non-delay. And I realized it was going to be like $1,500 a month, a year, and I was like, nah, screw that noise. I'm good. Why is the CME chart so expensive? Because they're the CMEs, they can do that, man. Work. Yuck. Speakeasy. Thank you, 7. Thank you, K7, Jixer, and Mbait. Star Wars. Hey, Crystal Gamings. How you doing over there on Twitch? Let's see here. What are some other good volatility indicators you recommend backtesting, not including TDFI or water? I mean, there's Bollinger Bands is good. ATR Bands is really good. On-balance volume. There's an on-balance volatility. One that I think is interesting, but I don't think as good as people think that it is Bitcoin historical volatility. You can also, there's a regular historical volatility indicator. The MACD histogram, the money flow index, all are pretty good. Anything that is directly measuring volume or some measurement of volatility, whether that's the average high-low range, or whether that's the average low to high, or, kind of, which I believe I just said the same thing twice, but you get the point. Average true range. There's lots of different neat implementations of average true range. Did the chest open? Yeah, let me check on that. No winners this time. All right, so hold on. Let me. That's gonna switch me over to here. Sorry about that. Yeah, it looks like. Let me try distributing the rewards again. I don't know what's going on with DLive right now, guys. I am trying, and it's saying that it's in the middle of a distribution reward, but it's not getting it. Oh, Forza World. Got it all? I mean, I'm happy for Forza World. I just feel like I saw some other people definitely like putting in work there on DLive today. Yeah, I'll just unplug my modem, bro. No problem. Not even a thing, man. DLive live. Chest glitch. What would happen to the price of a Rembrandt if people who didn't own one could short a forgery? I love you, man. You asked some of the best questions. I did check my TCP/IP settings and enable cookies, guys. All right, guys, it is 1:56. And you know what that means. Thank you guys for joining me for another exciting episode of Breaking Bitcoin. Of course, I've been your host, Justin Wise, lead analyst and senior mentor at CrackingCryptocurrency.com. I want to give a big thank you to today's sponsor, Coygo. You guys can check them out at Coygo.CrackingCryptocurrency.com. Again, it is a desktop application that you can utilize to manage multiple cryptocurrency exchanges, transfer funds between multiple cryptocurrency exchanges, see real-time order book data and arbitrage spreads in real time, capitalize and take advantage of those spreads, and trade and execute completely from within one location with all of your API keys stored and encrypted on your local machine, never on Coygo servers, and it's free. Yeah, it's free, Free. You guys can go check that out at Coygo.CrackingCryptocurrency.com. We don't make a dime off of you clicking that link. Not that it's Coygo, because it is free, as I mentioned. So you guys can go check that out if you want. Huge shout out to them. And also the crypto comment giveaway sponsor of the day, month, quite a while. Good friends of the show. Spectre Security Coin. Make sure to go check them out at spectresecurity.io. Highly pleased to have them supporting the show. Also go check out their new website. They just redesigned their website, spectresecurity.io. Highly impressed. Good guys. All right. If you guys want to support the show, if you enjoy what we're doing, if you want to support good content and content creators, and if you guys feel that we fall into that category for you, Please do everything that you can to support the show. You guys can do so by subscribing here on YouTube, giving the video a thumbs up. If you're watching on DLive or Twitch, consider giving us a follow or a subscription on Twitch. You guys can follow us on Twitter at tw.crackingcryptocurrency.com. Pretty active over there. We post quite regularly. Look for the Breaking Bitcoin Bits segment to come out every evening at 6 p.m. And we are here Monday through Friday, 12 to 2 Central Standard Time. You guys have been amazing. Thank you so much for your support. If you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, make sure to leave them in the comment section down below, as well as your answer to today's question of the day, which is, what is your plan to support the actual, to kind of push back against what may be the initial kind of foray into a censorship policy on cryptocurrency here from YouTube and potentially even Apple, from big tech. Because they might see it as a potential threat, or they're just trying to capitalize on the market themselves. We know that Google has recently stepped into finance, and we know that Apple has obviously stepped into finance, and it would not be surprising for them to be developing their own forms of cryptocurrencies. So potentially, you want to suppress the competition before you announce the replacement is typically how it works. Create demand and then provide supply. So definitely leave your comment for that. We will randomly pick a winner who answers that question in tomorrow's live stream, and that individual will win 8,000 Spectre Security Coins XSPC. If you guys would like access to everything that the premium members have, if you guys would like to live trade with myself and my team of analysts, if you guys would like to trade along with Da Vinci, with Alex, and all of the others, if you guys would like access to our proprietary indicators, to our strategy building pathways to profit course, if you would like to use our tools and follow our rules, it would take me quite a while to sit here and list everything that we do. We are the fastest growing trading and education group in cryptocurrency on the internet for a reason. You guys can find all the information out about that, as well as links to everything you could possibly need in your life here on the interwebs down in the description below, or by visiting premium.crackingcryptocurrency.com. Again, my name's Justin, here for Cracking Cryptocurrency, and hope you guys have a fantastic day. As always, trade safely, and I will see you guys tomorrow. Cheers.